Good morning, everyone. Today is episode 6 of Home Buying 101, our Lender Chat series. And today we are speaking with Susan Muller of Lend Mortgage, and she's got a great topic, which is an awesome alternative if you're out there house hunting and the pricing has just got you down. She's got a great option for you. So I'm going to let Susan take it away.
Yeah, I think this is a really great topic for us to talk about in this market. Obviously, the market has changed from what it was a few years ago, and not everyone is wanting to sell their home. They're trying to hold on to that really super low interest rate. And so the ones that might be available out there to you may just need a little bit of updating, maybe some major updating. Those type of loan options are really all available at the end of the day and something to kind of take into consideration. And also, what I like to talk about here when I talk about renovation loans is, maybe you have to be in a certain school district or want to live in this particular part of town, and the only thing that's available are those older, maybe 70s type decor homes. Just those types can be truly updated in a home if you find the one that really works for you, and depending on what those circumstances are.
You mean you don't like that old gold color or that olive green carpet and appliances? Come on,
You
Susan.
know, it's really funny that you bring it up. We were watching a movie the other day. We kept calling it mustard and olive green. And it was just
Yeah.
so confusing why that was ever a thing. But absolutely, all of those things can be updated. So you can get those paint colors that are more modern touch. All of those things can be potentially included in your purchase. And so that's what we're going to go over today. So we're going to dig right into some of these different renovation loan products that are available. First things first, I just want to squash any ideas that it's going to require 20% down. It does not. We've got renovation loan products where you can go as low as 3% down, believe it or not,
Nice.
unconventional. So we're going to talk about those a little bit. I'm going to go ahead and share my screen. Some of this material for the viewer, they maybe won't be able to read all of it, but I just wanted to highlight some of the different options that are available. All right. So we're going to dig right into some of these renovation loan products that are out there. This is just a quick little PowerPoint. In the event that any of the viewers out there are interested in learning any more about this, feel free to reach out to us. We can definitely provide more information. But this is just going to give you a quick little overview of some of the things that potentially you could have renovated in that neighborhood that you have to be in, the school district, that kind of thing.
But also, people
No,
like
that's okay.
me that are absolutely sick and tired of dealing with Nazi type HOAs, most of the time, the only way to get away from that is going to be an older neighborhood.
Yes, and I'm going to add to that, those older neighborhoods also have the lower tax breaks
They do because
typically as
exactly, and
well.
they're usually not in muds either. There are
That's right.
definitely some
That's right.
advantages to an older home.
That's right. And when I say tax breaks, I mean, hundreds of dollars a month. It's definitely just a completely different ballgame there. So definitely a lot of advantages there. These are just a few of examples of eligible products, but really this list is definitely not at all inclusive. If you're wanting to update kitchens, if you're wanting to even add a bedroom, add a deck, add a pool, even all of those things potentially could be included with the renovation loan products depending on which loan program that we go with. So, if you have that home that, I've got one right now, I'll just use it as an example. It was a home that was built in 1912. It's got a lot of good bones, but it needs a lot of work. It needs some foundation work. It needs new paint inside and out, gapping in some of the doorways and windows because of the foundation issues. It's livable. And in fact, there are tenants currently living in it. It's a duplex, so we'll go over that here in a second as well. But the client is doing one of these renovation loan products, and so she's able to do a complete overhaul of that and bring it up to typical modern day standards, but get some of those really structural and integral things fixed on it as well. Really great loan product in that respect. She's purchasing it for 350. She's going to do about 40K in renovation. So the end acquisition cost before down payment is going to be 390,000. But okay, so we're going to move on. I know we're limited on time. It's quite a lot, but this is a very brief overview. This is Fannie Mae Home Style. There's also a Freddie Mac exact product. I did not include that in these slides because they're really very, very similar with some very minor differences. Both you can go down. This one says 95% LTV. That would be a 5% down payment for your client. But depending on if they might be a first-time home buyer, haven't owned a house in the last few years, you can potentially go as low as 3% down on these as well with conventional. It's important to note that it's not limited to just a one unit property. If you see here, it can go up to 4 units. So if you find that investment property that is a duplex, for example, and you've got a tenant living in one of those units and you want to use that income to qualify, these loan programs can be used for that as well. And you can renovate that investment property that you're moving into, as long as you live in one of the units as your primary. Now, we do have investment property loan programs as well. The down payment requirement is higher on those, but if you have a client that's looking to do this for an investment property, that's also an option as well. Very quickly, we've got the FHA program next. FHA, there are 2 different types of renovation loan programs that are available with FHA. One is what's called a standard FHA 203K. The other one is a limited 203K. The main differences between the FHA 203K standard versus the limited is going to be the total renovation costs that are being rolled in. Also, if there's anything structural that's being required. So with the standard, you can do structural type renovations to the home. It is going to require what's called a HUD consultant to be involved in the process. It's not necessarily a bad thing, in my opinion, because the HUD consultant does come in and verify that your bids that you're getting make sense for the work that's going to be performed. They're also going to be monitoring the process to make sure that it's being done according to the FHA minimum property requirements. But that being said, you've got a little bit more oversight there. So depending on what your temperature is there, if that's something that you want to have to deal with or not, there also is an additional cost for the HUD consultant. So those are really the main differences between the standard versus the limited. The limited, I'm just going to hop right down. I'm going to touch upon that. The cost of the work cannot exceed $75,000, and with the limited, it does not require the use of a HUD consultant. In addition to that, there's no structural type repairs that can be included with the limited 203K. We have the USDA Renovation Loan Program as well. I know that we're in the Austin area, but there are some areas in the surrounding areas that are USDA eligible. A lot of people do not know that. They think it's farms, which it really is not. USDA is great because it's a zero down loan program specifically. And yes, we have that USDA renovation loan product available. So I'll just highlight that very quickly as well. USDA 100% financing. So you're purchasing a home for zero down. You're adding the cost of the renovations to it. You're truly being able to get into a home with zero down and zero out of pocket. A really great program for those that have a limited income and struggle to come up with those down payment funds.
And I had a listing last year out in Orchard Ridge, and it was USDA eligible.
Yeah.
So just
it's really
always worth asking.
Really great program. A lot of people don't think about it or consider it. Some lenders don't do a lot of them and understand, that it's definitely a viable loan option out there for the client. Anytime that I am doing a loan for somebody that's I've come from a small town in Texas, pretty much the entire area is USDA eligible. So anytime I'm doing loans that are at all without the city proper limits, then we should check and see if USDA might be an option, because you'd be surprised. It's not going to be just completely out of the country. It may be USDA eligible without you even realizing it.
Good to know.
Okay, we're going to move on to the VA renovation loan product. A lot of people are not aware that with a VA loan, which is also zero down, commonly understood, that you can also do what's called a VA renovation loan. This is also a zero down loan program, 580 minimum FICO score to qualify. It does have some limitations in terms of what you can do with the VA renovation loan. So nothing structural. So it's going to be more cosmetic. If you're wanting to add that bedroom to the home, unfortunately, that would not be eligible with this program. But it's a really great program for those veterans out there. They worked hard to serve our country. It's nice that we can offer that as an available loan option to them. Questions about any of that, Pam?
No, but you and I had talked about this. What I'm seeing, you can
Yeah,
typically pick up something that's been on the market longer. You have more negotiating power as a buyer, and knowing that, okay, this house is in the neighborhood I love, 10 minutes from work, great schools for the kids. I love the layout of the house, but oh my gosh, I hate that old carpet and the wallpaper, et cetera, et cetera, et cetera. So knowing that you have access to renovation loans that could fit your financial needs as far as down payment requirements, you can pick up those houses for a lot less money than a it's perfect move in ready, and the interest rates aren't crazy high in comparison to
right.
just getting a normal conventional loan.
Yeah, I'm glad that you brought up interest rates because that renovation client that I have right now, her credit score was 695, and we were able to get her into a 6.5% rate with no points on a renovation loan product. And so we definitely have quite a bit of options there in that regard. Rates were even available, lower rates than that with a rate buy down. And so I guess what I'm getting at is that some people do believe that the interest rates on these loan products are going to be sky high, and
Mhm.
that's really just not the case. We That's similar to a normal purchase loan if you're going to purchase an existing home, and so don't shy away to go with the house that maybe needs a little bit of renovation so that you can make it your own and make it that special house that you've been looking for all along, and also potentially walking in with a little bit of equity. To me, it's a win-win. Yeah.
Okay, so lesson learned here. A, don't assume anything because I'm one of the ones that assumed that a Reno loan was going to be a crazy high interest rate. And number two, ask. I work with some great lenders. Susan has given you some fantastic options. So between Susan's expertise in mortgage loans and all the choices that she has, and my expertise with the real estate market, even if you think there's no way I can get a house right now, let's talk.
Absolutely. Right now in this environment, there honestly is a multitude of different loan program options that are available for the buyer. So, as much as some people are discouraged by the interest rates, I would argue this has opened up a lot more opportunity that potentially you never had before. So, it's really a great time to get into the market.
Well, and I was having this discussion with somebody the other day. It's like people, I think, are still kind of sitting on the fence, hoping rates are going to come down below 4, get closer to 3. I honestly do not think I am going to see, like, I currently have a 3.65. I'm not going to see that again in my lifetime. So once I sell that
Yeah,
house and move on, I
yeah,
just need to get over that and accept
yeah,
the fact that rates are going to be in the sixes, most
yeah.
likely for the rest of the year.
Yeah, well, and I mean, and even if they do go down, I don't know that they're going to go down into that 3% range ever again, just like you
I don't
said,
think so.
because really that had to do with major economic and world situations that none of us, like COVID, for example, that none of us want to be in anyway. And so it's really a much more normalized
Mhm.
interest rate, quite frankly.
Well, yeah, because it was so tough on buyers that didn't have an extra 100 grand cash to overbid for a house. And
Yeah,
look at what all that overbidding and overpaying did for our market. So let's not go there again. Let's be grateful that we're not in the 17s like we were back in the 80s, and
right.
have conversations, don't make assumptions, and talk to a trusted professional.
Exactly. Yes. And
So,
that's what we're here for at any
yep.
time. Yeah.
Okay, well, our contact information is on the next screen. Thank you for joining us today. Thank you, Susan, for all this great information, and we will see you next week.